welcome back, everybody. We have to think about what we've done now before we move into why I chose to make this the third one. We've looked at the basics, made no assumptions. We built cases to move us in a direction which took us naturally to credit, what credit is, what we can do about it. A lot of questions center around issues, repair, but we really need to look at discipline. Discipline is the core of financial integrity. The people in this diagram here that I looked at had discipline. I lent to people that were financially disciplined. And that's why I didn't make bad loans. I didn't have a crystal ball. I just looked at who they were and how they disciplined themselves. And so how do we discipline ourselves? We use budgeting. Cher. Everybody know Cher, singer? Been around forever, right? Cher said, "I've been rich and I've been poor, and rich is better." Okay? Rich is better, all right? So this session is on how we get there to rich is better, okay? So we're going to move forward here. Yeah, budgets get a bad rap. Who likes the word discipline, right? We tend to think of budgeting as limiting our choices, but having a budget does not mean you have to feel deprived. On the contrary, a budget can help you build savings and put you on the road to accomplishing your goals. We talked about success earlier. Building savings is in line with Cher's statement about being rich. It's money in the bank, not in liability, not in credit, is wealth. So what's not to love about being wealthy? So a budget helps you take control and learn to tell the difference between wants and needs, and that's what this is about today. Prioritization, ranking, all the demands of life. They're beating on us all. Never seems to be enough, but we have to do something. So having a budget can reduce stress. Who wouldn't want less stress, right? You'll breathe easier knowing exactly how much money is coming in and be able to stay in control of where it goes. So we have to track and examine our spending. We have to figure out where the money's going. Sometimes we just look at it like, where did it go? I mean, it just was here and now it's gone. So just like in dieting, sometimes they tell you to write down everything you eat, right? During a diet. Keep an eye on it. It's an interesting way of doing it with your finance too. You can keep a record of every amount of money you spend and look at it a week later and see if there are any surprises in what you've spent, okay? It's awareness, mindfulness of your circumstances. That's what that would represent to me. Use a budget worksheet, and we're gonna look at a couple at the end here that I've included. A budget worksheet is a detailed list you can fill in with all of your monthly income and expenditures. You can write your own, or you can use the two which are attached as a guide at the end of this PowerPoint. Now we have to set goals. Identify and write down your goals. If we don't set a goal, how do we know when we're going to get there, when we're there? How do we know we got there? So don't be afraid to do that. They can be modified, but at least have a target in mind. It's just like I tell people when they're going on a diet. Get a picture of somebody that's reasonably the body shape that you want to be and glue it to your refrigerator. Use the law of attraction. See it every day. You'll start to make adjustments in your life if you really have an interest and a passion for being that person on the refrigerator. Come up with a goal, something reasonable. Put it on your refrigerator and say, this is where I want to be. This is where I'd like to be. A house, like you said, to have, get a picture of the house. Put the picture up there and really want it. Have a passion and interest in it. And have it as a target. Know that this isn't just hard. It's something that you're doing for a purpose that really matters to you. So identify and write down your financial goals. Maybe they include sending your kids to college, buying a home, or saving an amount for retirement. Set both long and short-term goals and set them reasonably. Don't pick a picture of some, movie star or something that's not reasonable in terms of dieting. Don't pick Bill Gates' mansion. I guess, if you're going to choose a house, look at something that's probably within the lines of not being at that level. Okay, so here's some spending tips. Look at the major ways you spend money, which method helps you not to overspend. Talk to family members. Kind of getting back to those money tips earlier. Remember those when we first started? Keep a personal spending diary. Write down what you spend. Keep it online. Just create an Excel worksheet on your phone. Get an app. Just have it. Just pop it in. Get used to it. It'll be a little bit of a chore to begin with, but after a while, develop a spending plan and budget. Track your expenses by category. Notice how other people affect your spending. Isn't that interesting? How other people affect your spending. Do comparison shopping. Don't buy on impulse. Okay, that's huge. I remember they saying, don't go to the grocery store when you're hungry. Go to the grocery store if you eat. Okay, the same thing. Don't go to a store and be swayed. With these shopping networks on TV. Know what you want. Look into it. Take your time. That's the thing, is be responsive to your life, not reactive, not impulsive. Think it through a little, please. Get information about a product or service before you buy. Buy what you need, not what you want. Avoid budget busters, wants versus needs. Some of the biggest barriers to building wealth are instant gratification purchases. And when we look at them, after we have them, it gets back to that more thing. We have it, and then it's like, now I want something else. It was almost like the process of getting it was more important than actually having it. They say that a sailboat, the two best days are the day you buy it, the day you sell it. In between, it's a hassle. So break down your budget. Be realistic and categorize your spending. Essentials, secondary needs, nice to haves, and unnecessaries. What are essentials? Groceries, housing, transportation, healthcare, basic clothing, utilities, insurance, and taxes. Secondary, cell phone, internet service. Nice to haves, vacations, entertainment, pets, gym membership, non-basic clothing. Unnecessaries. Where does the money go? Spending and impulse buying. I don't know where it went. Why don't I have more money in saving? It went somewhere. Tips. Take on a part-time job if you're ready to work full-time. Tips for increasing your income. I apologize. I know people are just listening here. Use a talent or a hobby to increase your income. They say, baseball players say, I can't believe I get paid to do this. Isn't it nice if you found that interest and passion I talked about earlier, where you have an attitude toward what you're doing, like this for me. I enjoy this so much more than when I used to be in investment banking. I really just like this better. But it took me years to figure that out. I do this pro bono. If I could turn this into a profession, wouldn't it be great? But you can volunteer into something to begin with that could lead to something, right? So I'm a good example up here. Update and distribute your resume. Okay, network, in other words, and follow up. That's the other part. If you go to somebody, follow up. My brother-in-law sells helicopters for a living, and he told me 85% of a sale is follow-up. Follow-up. Most people don't follow up. Ask people you meet for job referrals and follow up. I put it in bold there. Seek unemployment assistance if you're unemployed. Look at what's available under your circumstances. In this case, for debt relief too, through some of these credit counseling agencies based on your circumstances now, not when you agreed. Volunteer to get in the door. Just said it. Sell assets you're not using. Go on eBay, sell your stuff that's just collecting dust. I have a rule. If I don't use something for a year, it goes. I say, something, I went through all the seasons, I don't need this. I usually go to those Planet Aid boxes and just get rid of it. I don't want a lot of stuff. I like to simplify my life. So my rule is a year. I don't know, maybe that's too rigid, but If I don't touch something for a year, I usually don't need it. Rent out a spare room. Adjust your IRS withholding if you're getting a large refund. If you're getting a large refund, it means you're actually letting the IRS be your bank and you're not getting any advantage to it. So you might want to adjust that, spread it out over 12 months. You get less of a refund at the end of the year, but you'll have more money in your pocket. Okay. Remember, I talked a little bit earlier about longer-term mortgage. Okay, you're in control. If you're, you can reduce the payments through a refinance. Okay, so here we go. Quiz 1. Which of the following items should you turn to first to increase your income without negatively impacting your financial future or recovery plan? A, seek financial assistance, for example, unemployment or emergency aid. B, take out a loan. C, take money out of your retirement or savings accounts. D, enroll in a training program to learn a new career or job skill in order to obtain a better job. Anybody want to guess at this? Or educated guess? AD. Great work if you answered AD. You can increase your income by seeking financial assistance and by enrolling in a training program to a better or new job. We don't want to take out a loan, and we don't want to jeopardize our retirement. So how do we reduce our expenses? Well, this is the module on developing a budget. We want to watch our credit card use or use it to our convenience, as I said earlier, in terms of paying the full statement balance off every month. Restaurant meals are hugely expensive. Movies are outrageous now, aren't they? Avoid impulse buying on TV and in the mall. Apply for public assistance or some kind of assistance. Purchase only necessary items. Use coupons and sale flyers. Shop at thrift stores. Reduce utility bills. Use public transportation. Okay, now this is a bit of a matrix here. So we've gone through this. What about prioritizing? Can everybody look at this? I'm not going to read all 4 permutations, but I'll read the first one. A. And so this is in priority. We would want the expenses prioritized in accordance with a prudent budget and plan. A would say creditors or lenders first. Yourself, adding to your savings is yourself. Basic necessities is 3. 4 other high priority expenses, for example, insurance premiums and medical expenses. So those are the categories. So let's just see what I got here. Please excuse me. So who thinks it's A? Does anybody think it's A? Thinks it's B. Thinks it's C. Thinks it's D out there for people who are watching. Well, the answer is B. The answer is B. And this is really important because some people just don't figure this out. Like, oh, I got to go pay my creditors and lenders first. That is not true. That is not true. This is a little bit more of a meat on the bones slide than it appeared at first, because it's really teaching us what priorities should be in our lives and that we may not be clear on otherwise. So let's look at the answer. B, you should always pay your basic necessities before other expenses, or creditors or lenders. So let's look at B. It was basic necessities first, other high priority expenses, for example, insurance, premiums, and medical expenses next, then your creditors and lenders, only then your creditors and lenders, and then finally, if you have anything left over, you can build savings. You can't build savings at the expense of your creditors and lenders, but the creditors and lenders have to be subordinated to your basic necessities. Okay, so what does it say? Prioritize remaining expenses based on the amount of money you have left after each month. Out of that balance, you can then pay your creditors and lenders first and put the rest in savings. And so finally, and really we're at the end of this now, is 2 forms that I included that I like. One's very simple, 2 pages. One's a little more detailed in terms of weeks of the month. But what I'd like to say when we're looking at this form, for example, is that I'd like everybody to work backwards. I'd like everybody to look at what is reasonable in their lives, and then, only then, move up to what the income has to be to support that. Because I think people are going to be surprised. I mean, if they fill this out and not look at their exact circumstances right now and say, what would I like my life to look at? See what income justifies that level of budget, okay? Don't do the income first and then subtract. Figure out your expenses, what's reasonable, and then look at your own, of course. But look at what's realistic in terms of what you think your life should be in terms of your expending and what you're making in terms of income versus the expenses that you feel are legitimate within your own life. Do it exactly the opposite of the way we do it in reality, at least for a training tool, okay? That's my suggestion. And I think, and don't forget, the income is, in a lot of cases, is after-tax income. So we have to do basically 65% of the gross income would be the net income, and of course mortgage will, or if it isn't just rent, would include some kind of tax rebate in terms of the interest deduction, but I don't want to get too complicated here. But look at the circumstances, build a life based on expenses that you want, and then add them up and then fill in the income level and say, does my skill and experience justify making that kind of money in society? If it doesn't, then what we have to do is hold that one fixed or make adjustments accordingly and work through those expenses and moderate them in order to make sure that at a minimum, income and expenses are balanced, okay? Savings only occurs when expenses are less than income, okay? Are you cool with that? So I want to thank everybody for this wonderful opportunity. I think that's it, sir, and hope everybody benefited from this training.
This is great. This is wonderful.
I have one quick question.
Okay.
So
Do we have the microphone?
Okay.
We have one question.
Thank you. Well, thank you. I kind of already know the answer, but I'm trying to figure out how to get myself out of this situation. What would you recommend your total gross? So I'm assuming if you pay 70% toward your total gross income toward housing expenses, that's probably just out of control, right?
And those ratio, I want to be careful because I have my own way of looking at things, but that's high.
Yeah.
Sir, also, that's the wrong email address again there. For those watching this, it's stan.star.55@gmail.com. For some reason, we're not getting that corrected on all the slides. But so for those that would like to contact me, it's stan.star.55, not just 55. stan.star.55. Thank you. At gmail.com. And it's usually 30 to 35, okay? Somewhere in there is going to be what they would look at. If, for example, if you were to get a mortgage or something of this nature, if it's double that, how do you live? I mean, you're house heavy and cash poor, okay?
So how would someone get out of a situation like that so that they can look more marketable or reputable for, if they're trying to purchase a home? Because does that look good that they're actually paying 70% toward their housing income, or is that kind of like a turn up your nose, with a lender or someone looking at that individual? Wouldn't they look at that as, okay, this person's not managing their finances well, or?
Well, I would think that, I don't know, I have to be careful because I want to get away from what I think, okay? And so it would seem to me that what they would look at would be the impact of that on you, okay? If you're paying that much, how are you living? How can you pay for food? How can you, and so are your credit, is credit being used to pay the difference, okay? And so the answer is stop somehow and either sell the property or get out of the lease that you're in somehow and move into something within a band. And again, I want to be careful about giving any kind of recommendation, but certainly 40% should be a flag. If lenders generally look at 32 to 35 when they're making a mortgage decision, I mean, you may be able to stretch it, you know, but again, isn't it affecting your lifestyle? That's what you have to look at. I've got this great house, great view and everything, but I'm stressed out to the max because I can't do anything else. You know, and so I would recommend that this class or this webinar is a way, if we follow some of the precepts that were presented, is a way to reduce stress and find more contentment in our approach to life. And I believe that that's what it's all about, is to enjoy life and not be overburdened, because it's just stuff. It's all transient in nature. It's always changing. It's always moving. So it's important to find something more inner driven, and that would be within the level of responsibility. You probably don't need that much. It's just that for some reason you have that much, and it would be something to look at and say, why am I taking on these burdens? Why am I doing this to myself? Because you're the chooser, ultimately. Okay. Yeah, I think that's about it. Thank you.